Hey guys, this is a market update. The data is unequivocal, and how it relates to Bitcoin I will go through in this video. Look at this data, look at all of the data points right here, just showing exactly what's happening. This is why Bitcoin is not making new lows, and I want to explain that in this video. Coming to BTC right now, we've had an unprecedented attack on crypto, one of the biggest ever. Regulators and banks coming together to destroy the industry and wipe everyone out. But Bitcoin is not making new lows. It's in an uptrend. And so that is really important. The price doesn't lie. Why is this happening? Why are we not getting to new lows? Why is the price seeing so much strength? I'm going to explain that in this video and why I am so incredibly positive at this part of the cycle. If you are a trader, you're looking at technicals here. I'm just going to take this box out of the way. What we're seeing is a wedge, descending wedge within an uptrend. So you have this wedge here. For technicals and short-term traders, these are usually traded bullish. This is actually a bullish, price action right here. You just take the length of this, and so a breakout would be traded for a 30-31 price target. Short-term trading. Now, obviously, I don't want to trade that for short-term because I think the prize is much bigger than this. But we are not making new lows. We're basically flat on the week despite what's happened this week, and that should tell you something. Bottoms are formed where you get all of that and the price is just not forced lower, and that's because the market is looking out to what's actually happening, which I'm going to go through in this video. If you are a trader though, deposit bonus on Bybit up to $30,000. Fiat on-ramps still working. BitGet as well doing a deposit bonus with fiat on-ramps as well. So check the links down in the description for those deposit bonuses. The SEC suing everyone in crypto is a massive distraction. We know full well that this industry is not going away. It's an international industry and it's being supported in virtually all countries except for the US. That will change in time as well. What we need to focus on is what's actually happening in the macro right now, which isn't getting the attention in the headlines, which is why we need to pay attention. Firstly, the market does not care about inflation anymore. The market looking forward knows full well that inflation is coming way down and it's a rate and everything is pointing down. And so the next part of the cycle is what? The start of the next upcycle is when inflation protection assets will soar again, like we saw in 2020. So here we are going into that next part of the cycle, when inflation and currency debasement is actually something that central banks and governments want. This is how assets that protect you against that react. We had the QT and the restrictions in monetary policy. Now we're going into weak economic times and easier monetary policy. That is 6, 12, 18 months. What's going to play out in my opinion? So you can see this, inflation, not an issue. Also, look how weak the economy is. This is the stock market, the S&P 500. This is literally FANG. The tech trade is all of the performance in the stock market this year. The rest of the economy is flat to negative. Very important because this is not inflationary. This is showing us weakness in the economy, and that will be reacted to by central banks and governments. The Fed have a very clear target: full employment and 2% inflation. Inflation was too high, unemployment was very low. They went through the tightening and they've done their job. This is inflation, the rate of inflation coming down. Inflation is still going up, but the rate at which it goes up is now slower. They want this at 2%, and it's starting to come down. The forecast for this month, obviously previous month, but we get the data this month, is 4.7, so another drop. Now we see this is services inflation, which is really what the Fed looks at. Basically, it's wages, right? And we're seeing this start to come down. So again, this is the stickiest part. It's still way too high, but the trend is very clear. It is topped, it looks like, and it's starting to trend down. So this is very sticky, but this is what they're going to look at, and it's trending down. We also see initial jobless claims starting to tick up, right, from a low there in October 2022. A higher low. We've just ticked up to the highest level, I think, since 2020 or something like that. These are important if you're trying to get in early on these trends. So what we're seeing is weaker economic figures all over the board. And what that means is that the mirror trade of that is BTC. And we're seeing, I want to focus on the EMA ribbons here and the yellow line, because this is an important flip right here. And see this, we're just getting this huge compression in the EMA ribbon. And that happens when you get a flip from one market state to another. So during this, bear market, you see the flip here, right? That was the flip on the bearish side. We had this huge uptrend, new all-time highs, the yellow above the others, right? So bull market, short-term ribbon above all of the longer-term ribbons. And then you see the flip here to the bear market, real bear market. We are seeing that compression again, the flip to a bull market. I believe it is. I believe over the next 6, 12, 18 months, Europe's in a recession officially, 2 negative GDP quarters, right? And so weakness across the board, rate expectations may come down. Now, I know that the Treasury general account may be filled. That may lead to some weakness short-term in risk asset prices because the US will issue a ton of bonds, which means potentially yields go up as the price comes down, as market participants are flooded with all this debt. I understand that short-term. I just think that it's not important to focus on, because what's important is 6, 12, 18 months where you're getting a weaker world economy. We know what central banks do. They're very active in the market, and they will want to reduce rates and stimulate economies because they need inflation to monetize the debt. They need that 2%. And if it starts to go under that, they'll be very active. And that is the Bitcoin trade. That's the mirror. And we're seeing the market price that in. The flip is occurring into bull market during this yellow phase, which is exactly where it is predicted to happen. Mark in your calendars next week, June 13th and 14th. It's the next FOMC meeting. This is going to set the stage of what happens in the markets in terms of Bitcoin and crypto and where they trade. Now, the market has a 70% probability priced in right now that the Fed are going to pause and not raise interest rates again. This has wildly swung between the two, between a raise and a pause. Looks to be a pause now, mainly because of unemployment starting to tick up. And so once that starts going, that's the end of the cycle, essentially, the rate hiking cycle. So this is very important. This will set the stage. The Fed are never going to come out and say, we're going to stop and then we're going to cut in 6 months. What they will say is, inflation seems to be coming down. The jobs market seems to be ticking up, but our job isn't done yet. We're going to pause and see what happens. But the data, once it starts to trend, cannot be changed quickly. And so we're just going to see that starting to come out weaker and weaker and weaker, which is the end of the cycle. So that's what we're going through right now. And it just takes months and months, but this is an important meeting. And if the Fed come out and say, we're kind of done right now, you might see a bid up in risk assets again. And we're seeing this trend. This is Ethereum, just seeing the trend now, right? It's turning into a trend, and we're seeing Bitcoin, just turning into a trend right here. So weakness of monetary policy is strength in these assets that are growth assets over time. If you are a trader, 30K deposit bonus on Bybit and BitGet deposit bonus as well. You can check the links in the description for those. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.